Nike has a market cap of 149 billion, PE of 25, and a dividend yield of 1.28%. So let's perform a top-down examination now that the profits have been disclosed to see whether or not this is a value investing opportunity for us retail investors to pick up shares at a discount. The stock is down about 45% from the 2021 highs, but that begs the question of whether or not this decline is justified or rather unsupported market behavior. Stick around to find out as we're talking about that and more in today's episode. How's it going? Welcome to Everything Investing. I hope you're having a great day. Today we're going to analyze Nike's business and earnings results. We'll start with a full analysis into the financials, the top line, the bottom line, the balance sheet, and then finally we'll conclude with an evaluation of this business using our intrinsic value calculator seen on screen, which will identify whether Nike is a value investment or not. If you enjoy the analysis and the value investing perspective, please like and consider subscribing for more of this content. All right, so let's dive into Nike's Q1 2023 earnings here, and we'll start with the CEO's comments. They say that their strong start to 2023 is a testament to their wide portfolio and competitive advantage here, their strength of their brand, deep consumer connections, etc., and that this proves that their strategy is working, and that they plan to continue to do this in the future. And effectively what they're saying is that because they had such a strong first quarter, they're going to continue that throughout the year, throughout 2023, and that their focus is still on the consumer and to make sure that they're adding value to customers while they navigate these near-term dynamics, of course referencing the economic environment we're in right now, while still trying to expand for the long term through their consumer direct acceleration strategy. And as we can see here, this has been a business that has been able to grow their revenues year over year consistently, besides a few slowdowns here. However, it's clear to see while the top line is growing, bottom line is not able to grow at that same rate, and that's clearly because of their margins here. Historically, they have been able to maintain a decent cash to debt ratio, but in recent times they have had to take on some more debt. But we'll see when we analyze the financials if this has been a problem. Let's take a look at this quarter's results specifically to see what's going on exactly here. Starting with our statement of income here, we have revenues this quarter of 12.6 billion, cost of those revenues of 7 billion, all right, and that leaves us with about 5.6 billion dollars in gross profit. That's in line with their profit margins historically, which is around 45 to 46%. Last year it was at 46, so it has declined just slightly, but as you can see here, they do try to stick to about 45, like I said, percent margins here. So nothing to concern investors at this current point in time. Now, once we deduct for all of our other expenses, we're left with operating income here of $1.8 billion. This is down 13% year over year. And we can mainly attribute that to the increased cost of sales and their increased marketing and operating expenses here. But that is to be expected during this current economic environment. Altogether, we come out with earnings per share here on a diluted basis of about 93 cents. So keep that in mind once we get to the end of the video here, as we will be using that for our calculations. That is down 20% year over year. Now let's jump into the balance sheet here. We have cash and cash equivalents here of 7.2 billion plus short-term investments 4.6 billion. That leaves us with 11.8 billion dollars in cash on the balance sheet, plus their debt figures, which total up to about 9.4 billion dollars. So their debt is absolutely serviceable by their cash on hand. It's not an issue for shareholders at all. So the balance sheet looks good for me. Unfortunately, with this report, they did not produce a statement of cash flows, but historically here, they are trading at a price to free cash flow ratio of about 35. So that is a little bit rich, and that's just something to keep in mind. We will get into our calculator now. First, I wanted to show you what analysts are expecting for this year. They are expecting a slight decline year over year. They had about $3.83 for the year of 2022. For 2023, they're expecting about $3.80, just less than that. So we'll plug that same number into our calculator to see what shares of Nike can be worth for a margin of safety. So jumping into our calculator here, I've just inputted the $3.80 figure for earnings per share for the year. We do require a 10% return. They do pay a dividend, which is about 1.25%. And if we assume that Nike can continue their 5-year EPS growth rates of about 8% for the next 5 years, and then that declines to about 3% for the 5 years after that on a 25 PE, the stock would be worth $99. Now, we're currently sitting at $95 per share, which means we would be technically sitting at a discount to what their average growth rates suggest. Now, in the most optimistic scenario, let's assume we can grow for 13% for the next 5 years, and then that declines to 9%, assuming there's some kind of rebound here with the economic environment. On a 30 PE, we would be trading at about $167 per share. So a nice return from these levels here on that stock. But in the worst case scenario, if we can only grow for the next few years at 3%, and then we stop our growth, more competition comes in, supplier costs increase, etc., on a 15 PE, the stock will be worth $54 per share. All right, so based on our calculator's calculations, we can assume that Nike is worth about $99 per share. Currently, we are trading underneath that. And actually, after hours, we dropped down to about $86 per share. Wall Street did not necessarily like what they saw from this earnings report. But again, as value investors, you're never really looking or caring about what Wall Street really thinks of these stocks, because Wall Street always has a short-term mindset. And as a value investor, you need to have a long-term mindset, because anything can happen in the short term. It's the long term, into the long game that we are playing here. So right now we are technically trading at a discount, so it'll be interesting to see where Nike goes from here. And as you can see from this chart here, it looks like we're going to have some form of support down here at $85 per share, currently where we kind of are right now. If not, I can anticipate the next level would be around $70 per share. But that is the analysis for today's video with Nike. If you enjoyed the analysis to this point, please leave a like and subscribe, and I'll catch you on the next one.